Welcome to Market Brief After Hours. It has been a truly historic day on Wall Street, with global equities rallying sharply, oil prices taking a massive dive, and the technology sector absolutely surging. We are going to unpack all the numbers, the key takeaways, and what it means for the broader economy. To help make sense of this massive day, let's dive right in. What was the main catalyst that drove this incredible market performance today?
The biggest driver today was a perfect storm of positive corporate earnings and easing inflation fears. When you combine falling oil prices with incredibly strong guidance from the semiconductor sector, it creates a massive tailwind for risk appetite. Investors essentially moved aggressively back into economically sensitive areas of the market, and that pushed major indices to fresh record highs.
And the specific numbers, because they are staggering. The S&P 500 crossed a major psychological threshold today.
It certainly did. The S&P 500 advanced 1.46% to close at a fresh record of 7,365. That marks its very first finish above the 7,300 level. The breadth of the rally was impressive too. All but two sectors ended in positive territory. Industrials, information technology, and materials led the gains, while energy and utilities were the only groups left in the red, which makes sense given the drop in oil prices.
And the Dow and Nasdaq weren't left behind either.
Not at all. The Dow Jones Industrial Average jumped a massive 612 points, which is a 1.24% gain to close at 49,911. Meanwhile, the Nasdaq composite was the real star of the indices, gaining 2.02% to close at a record 25,839. That Nasdaq surge was heavily lifted by semiconductor shares rallying sharply across the board.
We definitely need to talk about those chip stocks later in the show. But first, you mentioned oil prices dropping. How significant was that slide, and how did it impact the bond market?
The slide in oil was severe. Traders aggressively reduced their exposure to supply disruption risks around the Persian Gulf. As a result, West Texas Intermediate crude fell 7.03% to settle at $95.08 per barrel. And Brent crude lost 7.83% to close at $101.27. That sharp retreat in energy prices immediately eased concerns about energy-driven inflation. Because of that, U.S. Treasury yields tumbled. The 10-year Treasury yield moved more than 6 basis points lower to 4.354%, and the 2-year yield also fell more than 6 basis points to 3.872%. Even the 30-year yield dropped over 4 basis points to 4.939%.
It sounds like investors are reassessing inflation risks in real time. We also got some labor market data today with the ADP Payrolls report. Did that factor into the bullish sentiment?
It did. U.S. private payrolls rose by 109,000 in April. That beat expectations of a 99,000 increase and was a solid step up from the downwardly revised 61,000 gain we saw in March. It shows the labor market is remaining relatively resilient. Wages for workers staying in their jobs rose 4.4% annually, which is down just a fraction of a percent. All eyes will now be on the broader non-farm payrolls report, where economists are expecting an increase of 62,000 and an unemployment rate holding steady at 4.3%.
Let's cross the Atlantic and look at the European markets. They posted broad gains today, but the underlying economic data tells a slightly different story. It seems like a bit of a paradox.
It is a fascinating divergence. European stocks closed sharply higher, primarily because lower oil prices lifted sentiment across the region. The Pan-European Stoxx 600 rose 2.3%. Looking at specific countries, the UK's FTSE 100 added 2.19%, France's CAC 40 gained 2.94%, Italy's FTSE MIB climbed 2.35%, and Germany's DAX rose 517 points, or 2.12%, to close at 24,919.
But the economic indicators weren't exactly glowing, were they?
No, they were actually quite weak. The Eurozone composite PMI fell to 48.8 in April from 50.7 in March. That marks the first contraction in private sector activity in 17 months. The services PMI dropped to 47.6, which is its lowest level in over 5 years. France was particularly weak, with its services PMI falling to 46.5 and composite PMI down to 47.6. The UK was the outlier, offering a stronger contrast with its services PMI rising to 52.7 and composite improving to 52.6. Italy also saw retail sales rebound by 0.8% in March. But overall, European equities rallied on the global sentiment and lower energy costs, completely shrugging off that weak Eurozone data.
We are going to take a quick break. When we come back, we will dive into the currency markets, check out some critical moving averages, and look at today's biggest individual stock movers. Stay with us. Welcome back to Market Brief After Hours. Before the break, we covered the massive rally in global equities. Now let's shift to the foreign exchange market. There was a lot of technical movement today, especially regarding major moving averages. Let's start with the euro.
The euro had a highly constructive session. Euro USD closed at 1.1749, up 0.49%. What is really significant from a technical standpoint is that the pair rallied strongly and reclaimed all major moving averages in a single decisive move. It finished above the 50-day simple moving average at 1.1642, the 100-day at 1.1708, and the 200-day at 1.1676. Immediate support is now sitting right around that 100-day SMA at 1.1708. If it can sustain trading above this moving average cluster, it keeps the near-term outlook very positive.
How did the British pound fare in comparison?
The pound extended its advance as well. GBP USD settled at 1.3593, gaining 0.41%. Sterling has been maintaining a sequence of higher lows ever since it broke above the 1.3400 resistance zone in early April. That reinforces a broader bullish structure. Right now, immediate support remains at the session low of 1.3538, and then further down near the moving average cluster around 1.3475.
And looking at the Australian dollar, it seems bullish momentum is really accelerating there.
Absolutely. AUD-USD climbed to a fresh multi-month high, closing at 0.7239, which is a jump of 0.79%. The price remains well above all its key averages, the 50-day at 0.7066, the 100-day at 0.6961, and the 200-day at 0.6751. Breaking above the former resistance near 0.7150 really reinforced this positive structure, and a sustained break above today's high of 0.7277 could open the path toward the 0.7350 region.
On the flip side, the US dollar weakened significantly against the Japanese yen today. What are the technicals showing for USD JPY?
Sellers definitely regained control there. USD JPY ended the session at 156.40, down 0.93%. The pair broke below both the 50-day SMA at 158.65 and the 100-day SMA at 157.30. However, it is still holding above the 200-day SMA at 154.13, so resistance is now positioned around that 100-day SMA, while support is located at the session low of 155.02, followed by that 200-day average.
Let's quickly touch on precious metals. Both gold and silver saw some dramatic price action today.
They certainly did. Gold rebounded sharply from support, closing at $4,694, up 3.04%. However, it still remains below major resistance levels, specifically the 50-day SMA at $4,800 and the 100-day SMA at $4,760. Silver, on the other hand, had an explosive day, surging 6.41% to close at $77.49. Silver is currently testing its 50-day SMA at $77.57. While it remains below the 100-day SMA at $79.67, it is holding well above the 200-day SMA at $62.71. That recovery has significantly improved short-term momentum for the metal.
Moving on to individual stocks, we have to talk about the market movers. Advanced micro devices really stole the show and seemed to ignite the entire tech sector.
AMD was undoubtedly the catalyst for the Nasdaq's record day. The stock soared nearly 19% after issuing incredibly strong second-quarter guidance. They projected revenue of $11.2 billion, which comfortably blew past analyst expectations of $10.52 billion. Plus, their first-quarter earnings and revenue also exceeded forecasts. This sparked a massive rally across the sector, lifting the VanEck Semiconductor ETF by 5% and pushing Intel up 4.5%. We also saw ARM Holdings rally almost 14% ahead of its own earnings report, helped by UBS raising their 12-month price target on the stock from $175 to $245.
There were some massive moves outside of semiconductors, too. Flex had an unbelievable session.
Yes, shares of Flex jumped 40%, hitting a new 52-week high. This came after the manufacturing company announced plans to spin off its cloud and power infrastructure business into a separate publicly traded company. Investors clearly love that strategy. Uber also had a great day, advancing around 9% after issuing upbeat bookings guidance for the second quarter, expecting between $56.25 billion and $57.75 billion.
It wasn't all green on the screen today, though. A couple of companies took some heavy hits.
That is true. CDW plunged 20% after the IT solutions provider reported disappointing first-quarter operating income, even though their adjusted earnings per share actually matched expectations at $2.28. And Cencora slid 17% after the pharmaceutical distribution company cut its 2026 revenue growth forecast down to a range of 4 to 6%, compared to their prior forecast of 7 to 9%.
It has been an action-packed session, from record highs on the S&P 500, Dow, and Nasdaq, to shifting currency trends and massive individual stock breakouts. The markets are clearly digesting a lot of data right now, balancing geopolitical headlines with corporate earnings. Thank you for breaking down all these complex moves so clearly today.
It was a pleasure. There is certainly a lot for investors to keep their eyes on as the week continues.
That wraps up our coverage for today. If you find this useful, please follow Market Brief After Hours. We will be back tomorrow to bring you all the latest updates and analysis from the financial world.